Hi, future homeowners. I'm going to tell you the things that I want you to know if you are considering moving from being a renter to being a homeowner. I definitely want you to do it. Renter's net worth is $6,300, $6,300, where a homeowner's net worth is $255,000. It's a huge difference. And I want you, as soon as you are able to purchase a home. Now, I want you to know a couple of things going into it, which I think are most important, and that sometimes stops renters from becoming homeowners. So number one, I want you to have an awareness of the real estate market. Watching this video is a great step, but I want you to have an awareness of the market to know whether or not you're in a seller's market, a balanced market, or a buyer's market. It has a lot to do with inventory and how many homes are on the market in your area. So the fewer homes on the market where supply is low, generally speaking, it'll be a seller's market. But it all depends on demand and interest rates as well. So I want you to become aware of the market. Number two, I want you to know your debt to income ratio. This is huge. I'm not going to go over how to calculate it, but this is one of the numbers you need to know how much a lender will potentially qualify you for to buy a home. It is drastically different from what you can potentially get approved for an apartment. Okay, and I have two videos. I'm going to link any videos down below. So with the awareness of the market, 7 things to ask your buyer's agent, and then how to calculate your debt to income ratio, I have a video called Can You Afford a House? Number 3, when you are ready to get pre-approved for a mortgage to borrow the money to buy a house, it is okay to get 3 lender quotes. Never just go to one lender. The credit scoring criteria allows you to shop around for different rates. Most buyers do not do this, and it's a huge mistake that most buyers make. They just go with the first person. They just go with their bank, the first person that somebody suggests. I want you to get 3 lender quotes to make sure you're getting not only the best rate, but the best terms and the best customer service. So definitely get 3 lender quotes. And it's okay for you to ask them to match the other rate. Like if you're going to, Target and Best Buy has something for a lower price, you would ask them to quote to match that rate or match that price. You can do the same thing with lenders. So just make sure you're getting 3 lender quotes. Number 4, just know this, with all the different loan types, you have an option to do a 0 down payment mortgage. You have an option to do a 3% down, a 3.5% down, or 5% or higher. It is not necessary for you to put 20% down. The reason why 20% is said a lot is because 20% helps you avoid paying mortgage insurance, because anything less than that is a higher risk to the lender, and they make you pay something called mortgage insurance to kind of protect them from if you eventually foreclose on the property. But you can buy a house with 0% down, 3% down possibly, 3.5% down, or as little as 5%. So don't get caught that you have to save like 20%. That's not the case. It may make sense for you to do 20%. In a lot of cases, it doesn't. It doesn't make sense for you to wait till you amass the 20% before you can buy, because as you're saving, depending on how quickly or how long it takes you to save, home prices may have gone up where it didn't make sense for you to wait. Number 5, if you plan to live somewhere for 5 to 7 years, like if you're planning on renting in the same area, same state, same city for 5 to 7 years or more, then I want you to consider buying a house instead. Renting is really for short-term instability. It is not going to give you long-term wealth. Okay, it may be like, it's kind of carefree, you don't have to worry about anything, but long term, as you get older, you will perhaps regret not buying a home, because when you are paying your mortgage, some of that is going toward the equity in the house. Eventually, you will own that property if you stay in it. You will never own your apartment. That money is always going to be going to somebody else and not to you. And that's why at the very beginning of this video, I put that the wealth, the net worth of renters is about $6,000 compared to $250,000 of homeowners. I hate to hear renters that have been renting for 15 years, 20 years, their entire lives. At some point, and that's not that they were low income, it was that they couldn't afford it. They just didn't know what to do and how to do it. You should not be a long-term renter if you have decent credit, if you have decent income. You should not be a long-term renter in the majority of cases, okay? So I want you to at least look into purchasing a home, okay? And the last thing I want to say is those people that are living in high rent areas, high rent and high home price areas, but you're making substantially lower than maybe the average salaries in your state or in your city. Places like California, places like Oregon and Washington State and New York, New Jersey, like high cost areas. I want you to consider, if you don't feel like your income will be substantially increased over the next few years, I want you to think about long term, does it make sense for you to move? Does it make sense for you to move so you can have a house, maybe a different quality of life? Because in some areas, it's not going to be possible, especially if you're in one, maybe you're a teacher and you plan on being a teacher. Maybe you are a police officer. There are certain occupations where the salary doesn't rise very quickly. I used to be a teacher and I understand. We were on that salary schedule, and if you were on that salary schedule, either you had to get a part-time job. You couldn't say, well, I'm doing a great job and you're going to get this big raise. The salary scale might have gone up little by little, but pretty much you knew what you were going to make. If you don't plan on changing careers and you're in one of these high cost areas, I want you to at least investigate what it looks like buying a house outside of your state, maybe as just a rental property so you can be part of the real estate market, or what it looks like to move out of that state altogether and buy your home. If you have any questions, please put them in the comments. Please like and subscribe to my channel for new videos every week.